Mark Wiltshire. Gentlemen, welcome, Mark. How are you today?
I'm doing great, Shawn. How you doing?
Oh, I'm fine. I'm doing well, man. Doing awesome. And no, this is not my house in the background. one day, but no, it's not the house in the background. You just asked me that question a little bit ago, but Mark, welcome to Lending with Purpose. We have these great conversations with clients and friends. Introduction to various forms of information and professionals like yourself that we wanted to know that exist or didn't know exist, and so you're here today. So thanks for joining us.
I appreciate you having me. I've seen the post before. I've watched it, and I'm excited to be a part of it. It was one of those things where you don't want to invite yourself over your friend's house, right? So I was just kind of waiting, hoping to be a part. So this is it's exciting. It's exciting.
That's awesome. So speaking of inviting yourself over to your friend's house, that's how this all came about, Mark. Everybody is maybe tired of hearing me say the same story, but I guess it's like a musician. They sing the same songs all the time, right? And no one gets tired of those hit songs. So this particular story, Mark, right before the pandemic, it would be a situation where I'd have you over for, just to my house for cocktail or dinner or whatever it may be. And so the spouses and everybody like kind of sitting around the island talking. I like charcuterie now, so let's just say we had a charcuterie board on there and we're talking. And so it'd be like we this amazing conversation, and I'm like, Mark, hold that thought. Let's walk downstairs and let's record this and let's get it going. So my grand idea for entertaining people was to build a studio in my basement, a lounge, and make it be a podcasting recording studio. And then a few weeks later, so 3 years ago, maybe this next week, we got hit the global health crisis and a pandemic. And so I couldn't invite you to my house to do these kinds of things. And this was my plan to do so. And so what happened, Mark, is we started to do this virtually through the platform that we have here. And so, here we are. But, when you said, speaking of not inviting your friends over to, inviting yourself over to your house, you would have definitely been invited over to the house. We would have been doing this in person. But thanks for joining us today.
Certainly. No, glad to be here. And also, by the way, as you described that evening with the cocktails and the food and the charcuterie, I might just be sitting on the porch when you get home. That's
come through. We may do that tonight, actually, because I don't think the kids have school tomorrow. Who knows, man? But not that really matters, because they're teenagers and they try to stay up late anyway. But Mark, tell us who you are, what you do, and let's get into this amazing conversation.
Yeah. So I am the executive vice president for the DC Metro region, the Mid-Atlantic for Kensington Vanguard National Land Services. We're a title company. The title company, it's the part of the transaction you don't get to see on HGTV. That's kind of how I put it as my shorthand, because buyers and sellers alike, and if they're refinancing, et cetera, people have gone through those transactions. They know about realtors, they know about lenders, of course, and all, but the title company is kind of the point of coordination between all of those entities. I've described it as the mortar between all of those loose bricks, right? And so it's hard to have a strong opinion about mortar unless there's a problem, and all of a sudden the foundation starts to shake. So we're an important piece. We keep the parties from having to trust each other. All the money's paid into us. We're clearing title. We're ensuring it for the lender and the buyer, if desired, and then making certain that the largest, most important investment that any individual makes until the next time they buy a home is that they're actually getting what they're paying for. So it's important, but if it has real estate attached to it, then we can be a part of that transaction.
Got it. Aren't you? Don't kill me, but you own a dog, right? Don't you have a pet?
No, I own a dog.
Yeah.
Yeah.
I know there's times, ladies and gentlemen. So Mark is, he's all things to some people, and much of the time he's a lot to everybody, right? And so I just sometimes remember talking to you in the evenings, Mark, about how a settlement went or a question about how to prepare for it. And I remember talking to you a couple years ago about your dog, and you care deeply about your pet.
Yes. Yeah, I do. I'm one of those dog owners that I have to remind myself to not liken him to children. Parents tend to find that pretty insulting. But I'm quick to show you a picture on my phone and things like that. So yeah, it's I didn't know I was going to be that kind of dog owner. And you mentioned the impact that the pandemic had on the way that you were imagining the podcasting and the way that it would be structured. I can't leave my house anymore without this dog wanting to be involved. His anxiety's gone through the roof. So, but that's, I deal with anxiety all day long, right? If it's, we work with large sums of money in shelter. So I know how to navigate it, whether it's on 2 legs or 4 legs. So, it's rewarding in either instance. But yeah, I am a proud dog father.
That's awesome. That's awesome. I wasn't gonna let you just go all professional on me on the introduction, man. We had to get that in there. Get that in there. So, Mark, just I'm sure we're gonna run the gamut of it all. We've been knowing each other for well over a decade. I think it's been like at least 15 years now, or longer.
I think so. I think it's right about 15.
Yeah. And so for we tend to, at least in my space, we take some of this stuff for granted. We talk through it. Not everybody understands it. But like, explain the basics of title insurance, because that's a big part. Like I get that question all the time. Like, what's this title insurance thing? Why do I have to get insurance? I have insurance to cover my home. And you're like, and then we Google it or we tell exactly what it is that we have the experience on, or we engage someone like yourself to help us explain it. And obviously you explain it at closing, but like, tell us like the basis of title insurance and why it's important to anyone buying the house.
So title insurance is, the short answer is what your homeowner's policy is to the structure of your home. Title insurance is to your ownership interest. It is meant to protect it, whether from small issue or inconvenience to potential catastrophic issue, right? Full failure of title, a successful claim against your ownership interest. It's how you know that you're not at risk, or at least that risk is minimized relating to this huge investment that you're making in the property. It's one of those things where when you don't always know when it's used to allow a transaction to move forward, and when it's not needed, people feel like, well, why did I buy that? There aren't a lot of advocates about it, and it's not really all that well understood. So the biggest misconception, and I think it probably helps to focus the mind on the importance of title insurance for a buyer, because the lender is going to make the buyer buy title insurance to protect the lender. The lender's not taking a risk. Okay, it's the buyer who has an option of whether or not they want to absorb the risk. But at the settlement, when the buyer is actually putting down their money, signing off on a loan in most instances for 6 figures or more, there's a lot of gravity going at that point. But what they're buying on the settlement date isn't clear title. The title's not clear. Okay. And what it makes sense if you think about it, because the various liens and clouds on title, whether it's a loan, judgments, water liens, tax liens, etc., IRS tax liens, we as a title company are using the money from the transaction in order to clear up title, right? So until the property is paid for, and in Virginia, I can't use the money until the transaction is recorded, right? So the whole thing is finalized. Now I get to use the money for the transaction to go and clear title up. So at closing, a buyer isn't getting clear title. What they're getting is a roadmap that we have designed based on all of our hard work and our research through all the public land records, chancery records, the Patriot Act database, the what's called PACER, public access to court electronic records, because we're looking for open bankruptcies and things of that nature. Any possible cloud on title, then we take those records, which of course have been recorded by fallible humans and searched by fallible humans and all that. So we haven't yet taken that piece out of it to all the potential issues where humanity might leak into the transaction. But we take all of those results and then we develop a roadmap for what steps are required to be taken in order to achieve clear and marketable title. So at closing, there is a roadmap we've designed for how to get there and a promise that we're going to work to get you there. Okay. But that's all there is at settlement. Title insurance makes certain we've done those things and protects you against any failures in doing them. I'll give you one example. Let's say a seller's
so Mark, go ahead. No, go ahead with that thought. Keep going. I apologize.
So let's say a seller's paying off a loan at closing. All right. It's $300,000 loan. They're paying off at closing. When we close, record, we disperse the money to that seller's lender. They get 90 days to record another piece of paper with that local county land records to tell the world that they've actually been paid off. So it's a quarter of a year from settlement until the world knows, oh, that loan is no longer valid anymore. And as a result, that's the type of thing that can occasionally be missed or just not quite followed up on, because it can be difficult to tack back a quarter of a year while you're still working forward. And again, the lender is just a group of individuals, right? There's no Mr. Wells Fargo or Mr. Bank of America. There is a bunch of people working there doing these jobs and taking these steps. So it's a long-winded answer, but it's really the crux of what it is we're doing. And it's probably the key misconception because people think, well, you've already, title's clear while I'm sitting here, so why do I need to insure it as such? No, it's not clear and won't be for some time. We've got a game plan, and that's really what's happening there.
And so so there's a lender's and an owner's policy. So for instance, does that protect me? For instance, if so the lender's obviously protects the lender from any unreleased liens and things of that nature. The owner's policies, for instance, is the one we get questioned the most because it's optional, right? What happens if something's missed in that process, like you mentioned, like you think that the liens have been cleared at the time, or you're in the process of clearing them. 6 months from now, a year from now, 2 years from now, we realize that something wasn't cleaned up, right? Does this policy protect me from someone coming back to me later stating that my title's not clean or my
yes, generally speaking, and the reason I have to phrase it that way is like any insurance policies, there are coverages and exclusions and things of that nature. But by and large, yes, if something's missed in that transaction, the first thing after a title claim is made, the first thing that happens is the insurer, our underwriter rather, will reach out and demand our file, right? They will call for a copy of our file, and they'll be able to review that process as well to make certain that every step along the way has been followed. And because some items, and the insurer they cover attorney's fees, anything that's needed to protect and vindicate the interest of that buyer, that new owner's ownership stake. They will, so it's attorney's fees and things of that nature as well. But they will at closing determine who needs to what steps need to be taken. Do we have to go after the seller because they signed an affidavit swearing that there was no unpaid work within a certain statutory period of time, but then it turns out, hey, they actually hadn't paid for something, right? They forgot that that they had somebody come in to paint and they hadn't paid her or the company or whatever the case may be. And so then a lien was placed against that property, what's called a mechanics lien. Well, that's a cloud against title. The buyer makes a claim, and then we have that using that document, that homeowner's affidavit that the seller signed. That's a hook that they've been placed on. So now we can go after that seller, right? You said that there weren't any of these liens. You swore to it in an affidavit with this is your signature. And so based on this, you're required to make good, right? To make whole. So that protects that buyer from having to come out of pocket to cover somebody else's lien or judgment or loan or whatever the case may be. it can be something as small as, you know, not paying for mulch, right? Because obviously sellers like to get the house looking good before they list it. So it can be something that small all the way to an unreleased lien or an outstanding interest in the property, ownership interest that wasn't properly conveyed out, which we see frequently when a property, if there was a death of an owner, the heirs or devisees of that decedent don't always nail down the process of conveying it amongst each other or to a family member or what have you. They may not always identify everyone who had an interest, things of that nature. So, there are some more, some higher risk transactions like new construction where there's a lot of vendors involved and things of that nature. But by and large, it's unlike other insurance policies where you have an annual premium. Title insurance is a one-time fee for the coverage, right? And so it allows you to have that protection for an asset of that size and scope without having a reoccurring fee for it. So from that standpoint, it's the cost proposition or value proposition, I think, is easy to identify.
Got it. No, thanks for that. Thanks for clarification on it. I was thinking about a property I bought was misrecorded. Mark, you talked about ownership for it was 3 generations. And it was because we had purchased owners title insurance that everything got cleaned up and it didn't cost an arm and a leg and a fortune. And even that particular property, Mark, the boundary lines it was a whole mess. And so because we had the owner's title insurance policy, we were able to work through that all and get everything rectified. We had to change the square and lot. We had to get new drawings. We had to get a new survey done. It was a pretty big ordeal. And so looking back, I'm thinking about like it was a great idea at the time to get the owner's policy because I think the owner's policy at the time we bought the property, it was like $500-$600. And so just imagine the cost associated with not having purchased that owner's policy, how much it would have cost us to get this fixed.
Yeah, and one of the challenges that people don't foresee if you're thinking through a potential issue is that getting a title examination isn't the same as getting a physical examination of yourself, right? It's not people don't walk into my office once a year and just ask me to pull title on their property, right? I just want to make sure nothing's been recorded, no shenanigans or anything like that. Make sure that everything that should have been released has been released. That's not how it works. People go to a title company when they're involved in a title transaction, which means they're either refinancing their home or they're trying to sell the property. So generally speaking, the only time that the issues arise is when there is a ticking clock, right? If it's a refinance, you have an interest rate lock that you don't want to expire. And so the time it takes to identify and try to fix that title issue might not line up with that transaction. If it's a sale transaction, there's a buyer on the other side who not only he or she has their own interest rate lock, in most instances, they also want certainty in their life and knowing that they're going to be able to move forward because the transaction can't proceed until title can be in a position as insured as clear and marketable. So it's a critical, to me, a critical component of protecting those future transactions as well. So it's to me, it's an easy investment, and I can say that the vast majority of transactions, we're talking over 90%, the buyers get owner's title insurance. I always tell folks, if you have a question about it, lenders do this for a living, and they're generally good with money, and they're not willing to take the risk. So if they're involved in enough of these transactions to where they found the risk to be de minimis or overblown or what have you, it might be something where they were willing to waive it under certain circumstances or whatever the case may be. And it's not the case. If you have a loan, that lender is going to make you get lender's title insurance. And if you refinance it, the new lender is going to make you get it. So the owner's policy, one-time payment for the full ownership period. And even after you transfer the property, let's say an issue is identified further down the line. When you buy a property, you're becoming a link in a chain of title. If they sue back down that chain of title, when it gets to you, hey, I've got owner's title insurance. They're still going to cover attorney's fees and things. So it just makes life easier.
Thanks for that, Mark. Thank you. Common issues, like what are some of the? We talked about a few here, but like just give me an example of like a common issue that you might go through when you're doing a title search, and then how do you how have you overcome something like this? Like just a common issue that you typically see.
So a lot of times there are folks where I mentioned the deed of trust hasn't been released of record. The lender was paid off, but they just never recorded the certificate of satisfaction, is what it's called, to prove that the loan's been paid off. In fact, it's legal for a lender to mail the original to their borrower, who was the seller in the transaction and has since moved on. Most people don't know what they're getting, right? They don't realize it's an important document. They have no idea that they should go record it. And so it's just unreleased. It allows us to move forward while in the absence of that release, or while we're still waiting to receive it in a lot of instances. And then, of course, we can chase that down in the background. It is also very common for people to have a judgment, whether it's a medical judgment or child support or a tax lien, etc. Those things not having been properly released or missed in a previous search and not paid off are also things that we frequently see. A lot of times, because the title policy covers the issue, we're able to use it in the background of the transaction and keep moving forward without having to introduce anxiety into the transaction of, hey, this might get delayed or this, that, and the other, because it allows us to keep the train on the tracks. So it's pretty common that folks have some bills that didn't get paid in a timely fashion, or were arguing with a contractor over payment, and so the contractor went and put a lien on the property. Probably the most common one is HOA liens, right? People are either aren't paying the dues themselves, or maybe wasn't bringing the trash can inside, and so that's a problem. I got a letter, didn't realize that they were going to put a $50 lien against my property, and so now they go to sell, and there's a lien or two on the property for a cracked driveway that they didn't seal fast enough, or the trash cans out front, etc. So that might be the most common that we see.
Okay, awesome. Thanks for that. So I'm going to shift in a little bit. We spoke earlier. Obviously, I mentioned the pandemic previously about how this all came about, these conversations. And so once we figured out how to get a signature on all those documents during the pandemic, things were just so crazy and busy for us throughout that time. And so since then, things are slower. Right. There's been a big shift in the market. We're optimistic that things are going to, shift back more favorably for the homeowners and such, and the home buyers. But my question to you is, how has the pandemic, from your eyes, affected the real estate industry in regards to, the title insurance market and such, like over the past year?
Over the past year, there's been a good amount of shifting, and some of which you alluded to. I think the pandemic, more broadly, of course, there was the initial point of anxiety, people not knowing, is this going to affect my job, my ability? People who were shopping for homes. Do I need to press pause, etc. But once that was less the case, outside of certain sectors of the economy, of course, you really had people. There's something funny happens when you tell people to spend all their time in their home. people care what that home looks like, right? You get people saying, you know what, if I can't go out in the city, I don't need to live this close to the city. I don't need to all of a sudden the paying more for the proximity to the city for probably a smaller footprint doesn't make nearly as much sense if I'm not using that city. So you saw a good amount of people move a little bit further out. The commute mattered less, whether they are now on a hybrid schedule or still working, able to work remotely. The worrying about that consistent commute mattered a little bit less. So we saw more movement where people, for people to get more value, more space. If you're going to be working from home, it's kind of tough to share a wall with the kids' playroom, right? It's and if you're going to, if the place where you spend most of your downtime is in your backyard, I'm gonna need something back there to enjoy, right? Whether it's a view, a fire pit, a pool, whatever the case may be, a hot tub. So we saw people trying to take advantage of that as well. And over the last year, this trend certainly continued until there became issues having to do with inflation. And so the market here, this isn't a scenario where the real estate market, died because of all sorts of factors. The real estate market, they've tried to shoot it, because for lack of sorry for the violent imagery, but but it's something where
I say we fell off a cliff.
Right. So we were pushed, but because rates were increased so quickly in order to combat the inflation, it's what we've seen over the last 6 months are sellers or property owners who might have considered selling, but their rate, it's hard to want to buy up. Typically people for most of their lives, they buy their first home and then they buy up as they're making a little bit more money at work. They have a child, needs, children come with a whole bunch of stuff. It's hard to get a pack and play in a studio. And so people start buying up, and they care about schools and things of that nature. And then kids leave, that might be when they start downsizing some. But it's hard to want to buy up when your interest rate, if you bought over the last few years, your rate is 3.5%, right? 3.25%. It's hard to say, let's double that and still feel like we're going to have the value, the month-to-month revenue to be able to cover what we want from a property standpoint. Now, renting and owning, two different things. So the higher rate also increases the tax interest credit, right, on the back end on an annual basis, but it does impact month to month cash flow, right, and affordability. So those things still need to be balanced, and obviously it matters. And it's not helpful that at the same time inflation still is impacting other sectors. If you're spending more on eggs and you're spending more on gas, spending more on that mortgage isn't necessarily what you're eager to do as well, if it's an option. So, but what I'm finding, there's still buyers out there who are this is the market that they found themselves in, and they know that, hey, if rates go down in a couple of years, I'll refi then, but I can afford this now. Buyers want properties still, and if they're well priced, if the seller's not trying to, hey, let me see if I can trick somebody to pay more, right? If it is a well-priced property, we're still seeing a lot of competition, and things aren't sitting out there too long. So the desire hasn't dampened, and that's why I started there. That the market didn't die. That interest and is still out there. There's just not as much inventory as what would be ideal in order to really soak up the buyers who are interested in participating in the market or entering the market as a first-time buyer.
Yeah, thanks for that response. So definitely, I just was talking to some agents the other day, and depending upon the location, because real estate's hyper local, right? And so depending upon the location, the locale, sounds like that there's still some competition going on because there are buyers that are in the market that are able to purchase, and so there are some homes that are hitting the market on a weekday and gone by the end of the week, and they have multiple offers, and we're still seeing that a little bit, not quite as much obviously as we had before. And I'm not going to sit here, Mark, and act like that that we're up 50% or have doubled our business, because things are definitely slower. but it's just a matter of, I think a big deal is part of it is about affordability too as well, is to try to find affordable products and to just, kind of once this inflation has been curbed, I think things will get a little bit back to normal, closer to normal, being back to normal, because the 2s and the 3s and the rates that we've seen, that's not normal. Like,
no, not at all.
That's unprecedented. Like, it's not even remotely close to being normal.
Yeah, people think 6.5% just because we've been so low before, that 6.5% is some crazy anomaly. It was 6.5% in 2006. The difference is people were also getting a second loan at like 11.5% at the same time. So it's this is what is actually normal. You can't even, if you know economics, you can't root for it to get back down there, because that requires global financial calamity. That's why it can be so low. Is just years of trying to make sure that we can build ourselves back up from the lending or not lending, the investment, the Wall Street shenanigans back in 2008. So this is definitely a more traditional market, and still on the low side of traditional, frankly. And things feel like that they've stabilized. So it is, I think that from that standpoint, it's a good opportunity for folks to enter into the market still. But yeah, it's like you said, it's certainly slower and certainly down. But that was kind of the point, because of the pace of building and remodeling and things like that. Lumber's jumping up, contractor pricing jumping up, and all that. Everything was getting so unsustainably expensive that this is actually creating a healthier pipeline. So beyond we're the end of it, right? Where the transactions, the end of the line, the whole pipeline needed to be made a little bit more healthy. And I think that's where we're at now.
Yeah, thanks for that. We're really focused on education. We feel like that by providing financial literacy and education and helping folks have a roadmap and a path to understand what it looks like to get to the point of home ownership when it's their time, it's super important, and that's going to help with the affordability piece. And then also for folks to really focus on budgeting, because at the end of the day, no matter what your rate is, it's going to equal a mortgage payment. And so, can you afford that payment? That's not to say that the rate is insignificant in the entire transaction, but it's really the payment that you're going to be paying for the next 7 to 9 years, because most people make some sort of a real estate transaction or a change within that time period. But if you have a 30-year mortgage, you stay that whole 30 years, you're going to be making those payments. So I think that's a big thing that you focus on as well. So before we wrap up, Mark, let's talk about a couple things. So let me see. Fraud, technology, and what was the last thing? Let's talk about fraud and technology, and then any trends that we might see in the future, and then we'll wrap up. So, I guess my question about the fraud is: have you seen it be abnormal, kind of spike up since people are in the house and we're doing a lot of things here virtually and doing stuff, using the cloud and technology these days? Have you seen that kind of thing, or is it a different kind of fraud on the title side?
It's a different type of fraud that is having a moment, as folks might say out in the common parlance. So the fraud is remote signing, the e-signing, where for lenders, documents and packages and things like that. Those portals have been. Real estate is a very heavily regulated industry. Realtors certainly through common law. Lenders fall under the banking. So banking bureaus and title insurance companies fall under the Bureau of Insurance. Insurance and banking pretty heavily regulated, right? So we tend to be very careful before rolling out any kind of digital platform, whether it's client facing or internal. I'll still knock on some wood because these things, it's large sums of money in shelter. It matters. So we tend to slow down to speed up, right? As far as where the fraud exists, though, hackers and thieves have realized just how much money and private information is moving around, throughout these transactions. And so what they understand is if your lender's sending you documents electronically and title companies are sending you paperwork and folks are sending their money through bank wires, and so they're getting wiring instructions and things of that nature, is they try to insinuate, hackers and thieves that is, try to insinuate themselves into that process so that they can try to trick the homeowners or future or prospective homeowners, buyers as well, to send them money instead of where it is meant to go, right? Send us your down payment or whatever the case may be. Properties are publicly listed, so they know what properties are out there. The owners of property are publicly known. And everybody or the majority of people put their life online. So they can get to these owners and try to engage in phishing campaigns to corrupt their inboxes, start to learn who is involved in the transaction. They'll just sit and watch and try to learn who's involved in the transaction. And it's an evolving threat. Sometimes they will try to send the email to the actual owner of the inbox and maybe copy and paste a signature block from somebody who's legitimately involved in the transaction to try to get them to, hey, actually, these are revised wiring instructions, or we need you to send this, your earnest money here, your down payment there. Try to get a seller to provide. If the seller's trying to provide their wiring instructions, they'll try to create new wiring instructions to send to the title company to say, hey, in fact, actually, I want my $200,000 sent to me at this account, not the one that I gave you earlier, or and try to put themselves in between those parties in a way where they're getting some money. And knowing that, being aware of it is key, because we are all moving so quickly. There are a lot of emails and digital communication involved inside of a real estate transaction. And I'll use a phrase I said earlier. Sometimes you got to slow down to speed up, right? If you're a buyer or a seller involved in the transaction, you got to scrutinize who, the email address that is coming from. Does anything look odd? Also, before sending anything, pick up the phone and call, right? The thing that we all carry around that most people are using as a camera, it also makes calls, right? So pick up the phone, call the party who is intending to send it to you, not from the phone number in the email that you're questioning, from the phone number, right? From the phone number from their website. Go to them directly. Hey, I just got this email. Verbally confirm wiring instructions and things of that nature. If you have any anxiety about it, checks still work, right? Cashier's check has to be certified funds. Most title companies will accept that or provide funds in a title company check on normal bank stock. So there are ways around it. What I find, and this kind of goes to your earlier point with folks, is it's more important now than ever to work with folks who, whether it's lender, realtor, title company, et cetera. And I always say a good agent is like personalized Angie's List, right? A good agent surrounds him or herself with good vendors and partners so that they don't have to do everything, but that they can their clients can be trusted to have a good experience. Work with folks who will take the time to help connect dots for you, explain things, but then also have the expertise and the talent to be able to do so at a high level. It's very key. So to me, that's where fraud really comes in. And like I said, it's an evolving threat, because when they have success, they'll try it. If it's not having success or starts to be recognized, they'll keep trying to tweak and evolve and try to get between the agent and the client, the title company, and the client, the lender, et cetera, in a way that can hopefully trick somebody to send them some money.
Got it. So I want to stay with that. We talk about tech all the time anyway, so we're not going to talk so much about tech. And you touched on tech a lot. Um, just for those that may have gone over their heads, for instance, right? When you're doing a real estate transaction, we can get money to the title company by wiring funds or delivering a cashier's check. So, what is your best practice in telling Shawn Williams that's about to purchase a home, that's about to wire $100,000 or $10,000 to your company? What is the best practice for doing so to make sure that the money actually gets to you?
So generally, we are going to provide wiring instructions through a secure email to the owner and ask that they call back to confirm wiring instructions. So you want to make sure that at no point were those instructions from point A to point B corrupted. We even with the secure email, we suggest that because if they're sitting in your account or have been sitting in your account, a hacker has been sitting in your account for some period of time. You don't know if they've gained the ability to see both the lock and the key come over, right? That's for that secure email. So you get the secure email, take a look at the wiring instructions, physically call the title company on a known number, right? Not something from the email. It should be the same number, but you want to make sure that you're not trusting emails because they can push you to call them and say whatever, hey, I can confirm it right here. So pick up, call, confirm those instructions, and then make sure that those are the ones that you are printing out and bringing with you to the bank. And so you want to minimize the amount of times that you're sending those around electronically. If your bank allows you to initiate a wire remotely, a lot of banks don't, in part because of this reason. They say you got to show up and be in person. If they allow it remotely, oftentimes there are other steps that you have to take. But if they allow you to initiate a wire remotely, follow the same practice with them. You can send it to whoever your representative that you're working with is there, whether by email or fax or however else they require it. But then also pick up the phone and call them to confirm. I just want to confirm that you got the right wiring information. Can you confirm this number with me, or can I? I'll read you the number. Can you tell me that if that's what you got? It's too much money to say it's not worth a phone call. I know a lot of times we're texting people who are sitting in the same room with us, right? This isn't that. Okay, this type of transaction where the stakes are this high, it's worth the marginal inconvenience in order to avoid a catastrophic loss.
Got it. Now, are you still accepting cashier's checks? That's $1 million question.
Yes, so,
some title companies won't. Others put a limit on the amount, but like what's the deal with the cashier's checks?
Right. If the funds are going to be greater than $50,000, we would prefer it be a wire, just because cashier's checks, banks will also scrutinize those. They may not make it as immediately available as it used to when I started almost 19 years ago now. That's right, when I had more hair on my head than on my face back then, but here we are. You want to you just want to make sure that you're proceeding in a manner that your title company is going to find acceptable. There are some banks that have gone the other way and said, we won't accept a wire. It has to be a cashier's check, right? So Kensington Vanguard, I can speak for us, and hopefully I'm sitting with everybody. But it is, a bank wire always works, and not ACH bank wire, that we can't have something that can be turned around, right? And a cashier's check, if it's going to be more than $50,000, it will accept it. We prefer that it be a few days prior to closing. Okay. And so that way the bank will allow those funds to be immediately accessible. A money order is actually considered certified funds. And there are some instances where, if you're not going to like the grocery store or 7-Eleven and just getting a bunch of $500 money orders, there's some banks that if you walk into your branch, that they will print a money order instead of a cashier's check, and they might charge you less as a transactional fee for the money order than the cashier's check. So for that reason, it's worth noting for folks. But those three methods are all valid forms of certified funds, and we as Kensington Vanguard accept all three along those parameters that I mentioned. It's just, I know, much to my chagrin, we don't handle every transaction. So if that's the case for any of the viewers, just know that they shouldn't take for granted that every title company will remain flexible and take a little bit more of a onus on themselves to have processes in place to continue to secure the transaction for the client and minimize inconvenience. They might simply have taken kind of a bright line, blunt instrument to it and said, we're not doing this anymore. So just be aware.
Got it. So out of respect for your time, we're going to wrap up, Marc. Like you've always been so great to us. You're just know so much about the business and put a ton into your craft. You always edify us and make us look amazing at the table with the clients, and it's just been great. So a couple things, three more things, and we're done. How can we help you and connect with you? How can we help you and connect with you?
So to help me, bringing me your transactions, right? Whether whoever you are on the other end of this, whether you own a home or looking to buy, working with a realtor or are a lender, title companies, the better we are at our job, the easier our job looks because we're in the background, and that's by design. If closing is really, really interesting, it's probably because something's going wrong. We are looking to keep it pretty boring because that means everything's been nailed down. But when it goes sideways, boy, does a title company matter. I just don't want people to have to wait to see it in that way. So let it matter. Scrutinize folks. I'm willing to fight based on talent, right? Based on service. I surround myself with folks I trust to reach a standard that I'm willing to be a prisoner of. And it is because it is a high standard, but it should be because of how much it means to every buyer and every seller. And so that's bringing me transactions is the key way you can help me. You can find all of our locations at kvnational.com. We also have a DC Metro specific site for kv-dcmetro.com. So you can look us up, find our locations. You can take a look at my bio and some of the rest of the leadership team. But we are we like to think we've got pretty good reach, and we're big enough to know that we're going to be here for the future.
Thank you. So here we are. We're wrapping things up. Marc, you get one person, one question, not two questions. One person, one question. Who would it be and what would you ask?
So, all right. So that's a good question. So I think I'm going to ask Jeff Bezos for $25 million. No, I'll ask Jeff Bezos. And it might seem boring, but the broader your organization gets, if you're running it well, obviously there are multiple departments, but there's an interconnectedness to it. Change, managing change and all that is always important. You have to be willing to evolve. I mean, Amazon used to sell books, okay, and I think there's probably a box sitting on my porch, frankly, right now. So it is understanding that change is inevitable. The bigger your organization gets, what is his process in managing the impact downstream, upstream, and how he measures when that change is worthwhile, when all of that potential unrest and upset in other departments is when the juice is worth the squeeze, for lack of a better phrase. So and how to manage that. So I'm interested in that, especially as our organization continues to grow and evolve and broaden our reach. You know, we do 1031 exchanges and all sorts of stuff. So that's something I'd be very interested in understanding.
You never fail. You never fail. So, of course, you would ask that question. That's a great question.
Yeah, although I would prefer to ask for the money.
25 million. That's too easy though. And he'll be, after he finishes telling you that, he'll be like, well, I have 25 million that I can invest in your company. It's too easy to just ask.
The key is for the number to be, the key is for the number to be small enough to where he might find it in his couch cushions, but large enough to where it will change my life. So there
That's awesome. Well, Marc, thank you so much, man. I'll ask you to hang out with me for like a minute more after we close out, but thanks for your time. As everyone knows, it'd be such a shame for me to know people like Marc and have them in my network and have folks like Marc in the network and not share them. If there's anything whatsoever that I can do and we can do to help you in any way, please don't hesitate to reach out. Continue to remain as safe and as healthy as you possibly can. And we'll be back here next week, next Thursday at 2:00. And Marc, thank you so much for your time today. Really appreciate you being so generous with it.
Thanks again, Shawn. Thanks for spending your time and energy doing stuff like this. People need the information and you're awesome at it. So I appreciate it. Thank you.
Thank you.
All right.